Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about T-Mobile US Inc. quarterly report. T-Mobile US Inc. offers a wide range of services and products to its customers. These include wireless communications services, voice, messaging, and data services for postpaid, prepaid, and wholesale customers, wireless devices such as smartphones, wearables, tablets, and home broadband routers, accessories like mobile communication devices and other related items, financing through equipment installment plans, reinsurance for device insurance policies, and extended warranty contracts. High-speed internet services. The company operates under 3 brands: T-Mobile, Metro by T-Mobile, and Mint Mobile. It provides these services through various channels, including its retail stores, customer care channels, national retailers, websites, and mobile apps. Additionally, it sells devices to dealers and other third-party distributors for resale through independent retail outlets and online platforms. The stability and growth of T-Mobile US Inc. TMUS stock price over the past year can be attributed to several key factors. Consistent strong earnings reports have been a major contributor, with the company surpassing analyst expectations for earnings per share, EPS, and revenue in each quarter of 2024 and 2025. This includes record-setting performances in Kone 2025 and Blockbuster results in Qtwo 2025. Robust customer growth and network expansion have also played a significant role, with T-Mobile consistently reporting industry-leading postpaid net customer additions and significant growth in 5G broadband customers. The company's advancements in its network, including the launch of a nationwide 5G advanced network and the beta launch of T-Satellite, demonstrate strong demand for its services. Strategic acquisitions and shareholder returns have further contributed to the stability and growth of TMUS stock price. Ongoing efforts to expand market presence through acquisitions, such as the pending acquisition of Most of U Cellular's wireless operations, signal future growth potential. Additionally, T-Mobile has consistently returned value to shareholders through share repurchases and dividends throughout the year. While minor fluctuations in the stock price occurred due to certain news events, the overarching positive financial results, strong customer acquisition, and strategic network developments have largely counteracted any sustained negative impact on the stock price. As a result, TMUS stock has shown a 10% one-year return as of October 22, 2025, with an all-time high of $276.49 reached in March 2025. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: postpaid revenues plus 12%, equipment revenues plus 8%, and other revenues plus 9% contributed significantly to the company's revenue growth. The acquisition of U Cellular's wireless operations and spectrum assets for $4.4 billion, along with strategic investments in digital out-of-home advertisements, Vistar acquisition, and advertising solutions, Bly's acquisition, also played a crucial role. Furthermore, joint ventures such as Lumos and Metronet added to the revenue growth. Revenue decline drivers: on the other hand, prepaid revenues declined by 3%, primarily due to lower net customer additions and increased deactivations from a growing customer base. Higher churn in postpaid phone customers also contributed to the decline, driven by industry switching and temporary rate plan optimizations. Net income and profit margins: a shift in performance. The financial performance of the company has undergone significant changes in recent quarters. In Q3 2025, net income decreased by $345 million compared to the same period in 2024, marking a decline from $3,059 million to $2,714 million. However, on a year-to-date basis, net income increased by $531 million, rising from $8,358 million in YTD 2024 to $8,889 million. Profit margins have also experienced a downturn. Operating income margin decreased from 23.6% to 20.7% in Q3 2025, while net income margin dropped from 15.1% to 12.3%. Although the year-to-date operating and net income margins showed slight decreases, they remained relatively stable. The reasons behind these changes are not explicitly stated, except for a mention of intercompany settlements contributing to the decrease in net income. Further analysis is required to understand the underlying factors driving these shifts in performance. The company's financial performance indicates a consistent generation of positive operating cash flow. This is evident from multiple references throughout the report, including explicit statements on pages 15, 34, and 62, as well as implicit inferences on page 39. The ability to pay dividends and share repurchases also suggests that the company has sufficient positive operating cash flow. The company's debt level and interest expenses have experienced significant changes. The total debt to third parties has increased from $76,768 million to $82,698 million, a rise of $5.93 billion. Furthermore, long-term debt has grown by $3.665 billion, from $72,700 million to $76,365 million. Additionally, interest expenses have seen an increase, with the 3 months ended September 30, 2025, experiencing a net interest expense of $924 million, up from $836 million in 2024. The 9 months ended September 30, 2025, also saw a rise in interest expense to $2,762 million, compared to $2,570 million in 2024. These changes indicate a notable increase in both debt levels and interest expenses for the company. Management is optimistic about the company's outlook, citing several key strategies to drive growth and expansion. The main focus areas include increasing competition through a combined network footprint, achieving synergies from acquisitions, enhancing rural 5G coverage, and retaining ownership of spectrum licenses and towers. Additionally, the company expects growth in service revenues, plans to acquire new companies to expand offerings, and will invest heavily in building out its nationwide 5G network and digital transformation efforts. To support these initiatives, management has authorized a $14 billion stockholder return program and is committed to investing approximately $80 billion between 2024 and 2027. The company has made significant moves in its financial landscape through acquisitions and divestitures. Notably, it acquired Lumos, a fiber-to-the-home platform, which is expected to enhance its network capabilities. Furthermore, the Sprint merger was another major acquisition that expanded the company's reach. On the other hand, the company has also undergone divestitures. One notable example is SoftBank ceasing to be an affiliate on August 6, 2025, marking a significant change in its business relationships. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has a history of paying out dividends to its shareholders, indicating a commitment to distributing profits and rewarding investors. Secondly, the company has also undertaken share buybacks, which allows it to repurchase its own shares from the market, thereby reducing the number of outstanding shares and potentially boosting earnings per share for remaining investors. Concerns about inventory buildup are evident in the company's financial summary. The data reveals a significant increase in inventory from last year, totaling $763 million. Furthermore, inventory levels decreased in both periods, suggesting potential issues with inventory management. These findings raise concerns about the company's ability to manage its stock effectively and potentially impact future operations. That concludes the financial summary for T-Mobile US Inc. Feel free to comment below, and I will be happy to answer them when possible.